Here is your weekly rate update. Let's talk about last week and then this week. So last week, core inflation data was hotter, but it was in line with what the market and Powell expected. The Fed's favorite measure of inflation, which is the PCE, it showed that headline inflation rose 0.2% in July, but that was expected. And then year over year remained at 2.6%, which was exactly in line with market estimates. The core rate, which is the Fed's main focus, rose 0.3% as well and was in line with expectations. So the bottom line basically is that the bond market took the report really well, even though the core PCE did rise. And then Fed Governor Wallace, who's one of the leading candidates for the next Fed chair, thinks that the labor market is continuing to weaken, and he also thinks that the neutral federal funds rate is 3%. And the current Fed funds rate is at 4.375. So that implies that the Fed is restrictive by 1.375% and has a lot of room to cut rates and still be somewhat restrictive. So that's really good news potentially for rates coming down the line. He believes that the Fed should cut about a quarter point on September 17th. He doesn't think they should go as far as a 50-point BIP cut just because that's a dramatic cut. And then reports coming out this week. Today, Monday, the market is closed for the holiday. Wednesday, we have the JOLTS report and mortgage applications. Thursday, the ADP employment report and initial jobless claims. And then Friday, we have the BLS jobs report. I hope you have a wonderful week, and I'll talk to you next week.